FORA.tv. The world is thinking.
The proximate causes of the current financial and economic crisis, as everybody in the room knows, I'm sure, are usually laid to easy credit, the cavalier attitude toward risk of our bankers and investment bankers, securitization, in which the traditional link between borrower and lender was severed. No good comes from that. The extraordinary leverage built into this financial system by derivative securities of mind-boggling complexity. The failure of our rating agencies and the conflicts of interest that they undertook, and the failure of our regulators to do their job. But the larger cause of the present crisis was our failure to recognize the sea change in the very nature of capitalism that was occurring right before our eyes. Think about it. That change in capitalism, simply put, was the growth of giant business corporations controlled not by their own shareholders any longer, but by the agents of the ultimate owners. What went wrong in corporate America then, aided and abetted by investment America, was a pathological mutation in capitalism. From the traditional owner's capitalism, in which the rewards of investing went primarily to those who put up the capital, of all things, and took the risks, to a new and virulent manager's capitalism, where an excessive share of the rewards of capital investment went to corporate managers and financial intermediaries. Two major trends set the stage for this baneful change. First, the old ownership society shrank radically in size and importance. Just a half a century ago, think about this, 92% of all shares of our corporations were held by individual direct stockholders. Today, those owners hold barely 30% of all shares. Ownership of stocks by institutions, on the other hand, soared 7 times over, from 8% of the total, the remainder, to more than 70% today. But in this new agency society, with financial intermediaries as a group now holding clear voting control of corporate America, our agents failed. They failed to behave as owners. Indeed, in far too many cases, these agents have placed their own interests ahead of the interests of their own principals, P-A-L-S here, I'm going to play on that theme, largely those 100 million families who are the owners of our mutual funds and the beneficiaries of our pension plans. It's not that we were not warned about the consequences of our failure to honor the fiduciary principle that no man can serve two masters, and that fiduciary duty imposes a high standard of morality upon those entrusted with managing the property of others. It goes back to the 8 centuries in British common law. In fact, way back in 1934, 75 years ago, in the aftermath of the great crash in the stock market, Supreme Court Justice Harlan Fiske Stone warned us. Think of how these words describe where we are today. The separation of ownership from management, the development of the corporate structure so as to vest in small groups control over the resources of great numbers of small and uninformed investors, make imperative a fresh and active devotion to the principle that no man can serve two masters if the modern world of business is to perform its proper function. Yet those, he continues, in 1934 who serve nominally as trustees but are relieved by clever legal devices from the obligation to protect those whose interests they purport to represent, corporate officers and directors who awarded themselves huge bonuses from corporate funds without the assent or even the knowledge of their stockholders, and financial institutions which, in the infinite variety of their operations, consider only last, if at all, the interest of those whose funds they command, suggest how far we have ignored the necessary implications of that fiduciary principle. The loss and suffering inflicted on individuals, the harm done to a social order founded on business and dependent upon its integrity, are incalculable. Could that have been written this morning? Yes. Those words are equally relevant at this moment in history and could hardly present a more accurate analysis of the causes of the present financial crisis.